Joining me now is Economic Secretary to the Treasury, Andrew Griffith. Minister, thank you so much for joining me this morning. Only weeks ago, these measures were being touted as the Big Bang 2.0. Now, today in the city, they're being called the Little Whimper. Where's the ambition?
Well, no, they're being called the Edinburgh Reforms, and they're a very ambitious set of reforms to seize on our Brexit freedoms, to deliver a smarter regulatory regime, one that's right for the circumstances we find ourselves in now, and that work in the interests of all the British people across the country, and also make sure we've got a high quality financial services sector. It's a really important part of our economy. And we're certainly not competing on the basis of low regulatory standards. But what we do want to do is modernise them and take advantage of some of the opportunities.
Well, we were speaking to Chris Haywood, the policy chair at the City of London, earlier today. He said that the changes were marginal compared to the 1980s Big Bang. When I last spoke to you, you were zealously defending Kwasi Kwarteng's mini-budget. Have you been reined in by the new Chancellor, Jeremy Hunt?
No, I've been extremely busy working with the Chancellor to bring forward what are 30, so it's a package of 30 reforms, the Edinburgh Reforms. They cover every part of financial services, from building societies, consumer credit, to our wholesale markets, how we get more listings back in London, and how we make sure that we get the right balance of investment in the UK with things like Solvency II, still within a very prudential, safe regulatory structure. So I've been very busy since we last spoke. And today what we're doing, combined with the Financial Services and Markets Bill, which went through the House of Commons earlier this week, is getting our rule book in a competitive state for the world that we're in today.
Well, in all of the documents trailing these announcements today, they're framed as a golden opportunity post-Brexit. But isn't the reality that these changes could have been made when we were in the EU?
Well, there's a balance. Some of them certainly relate to regulations in the United Kingdom, but others of them are part of that process of taking the EU rulebook and applying it for the UK. So Solvency II is an example of that. The PRIPS, ending the PRIPS regulation, the European Long-Term Asset Fund, which weren't particularly well used parts of the European rulebook, and we can replace those with regulations that are particularly tuned to the UK fact pattern. It's a competitive and international world out there, and it's important that we make the most of our opportunities. It's an important big economic sector for the UK, one that we're thriving in, we're doing very well, but there's also new opportunities from things like digital distributed ledger technology, green finance, and we're taking the powers to regulate those people that issue ESG ratings so that that market develops in a clean and transparent way.
But let's be frank, since leaving the bloc, we've lost talent and capital to rival financial centres. We were part of drafting the EU's financial regulations. Is it really the EU that was holding UK finance back?
No, well, look, I'm not fixated on any other particular market. I want the City of London and the broader United Kingdom to compete on a world stage, to make the most of the opportunities from our close friends in Europe, the biggest trading partner, but also those from different parts of the world. And the UK is the most international market. It's got the most international listings in sectors like insurance. You know, those are truly global markets. And the Chancellor and I want to be the best version of ourselves. We're not trying to ape anybody else. We're not particularly trying to compete with any one market. What we do want to do, though, is equip the UK financial services sector across its very broad range of fronts with a rule book that gives it the best chance of competing in an agile and flexible way.
But some of these rules were introduced in the aftermath of the financial crisis to protect financial stability, for example, on ring fencing. Just as we head into a recession, are you risking financial stability for growth that isn't guaranteed?
No, look, we're not abandoning the wholesale ring fencing. What we're publishing is changes to that to make it more flexible. But also, the world has changed. The financial sector, the bank balance sheets are in a very different position than they were. And the Bank of England has now brought forward a resolution regime, which means that We can protect the banks, we can protect consumers, but also protect the interests of taxpayers if there are ever any issues. So it's a very balanced set of reforms. Those ones in particular draw on the independent work done by Sir Keith Skeoch. And across the board, what we've done is sit down, listen to industry, listen to stakeholders, and try and get the right balance. And I think we have, and it's in aggregate, a very ambitious set of changes that we're proposing.
Andrew Griffith, Economic Secretary to the Treasury, thanks so much for joining me.
Thank you very much.